Oh man, so there you have it, guys. 25 basis point rate hike. We just had the FOMC meeting and they came out as expected, right? Most of the markets were expecting 25 basis points, and just wanted to make this video as a congratulations, right? We've just experienced the fastest rate hike we've seen in the US, one of the fastest rate hikes, deepest rate hikes, aggressive, out of control inflation. And now that could have been potentially, as far as the markets are concerned, because the markets are now pricing it in, the last rate hike of this cycle. We could now be planning for what could eventually be pause, stay at this 5 to 5.25% rate for a while, and then maybe even start to plan some cuts, right? And that is where the market can get exciting, because the money printer can turn back on. Now, there are a few important things that we need to cover off from the Jerome Powell press conference. He didn't speak about rate a cut just yet, or a pause. He still says inflation's still super high, there's more work to be done, fine. But there were some positives, and the most standout positive, which we covered on the live stream, you guys can go watch it. Sorry about the internet connection in that live stream, but you guys know I'm traveling right now, so I'm still committed to giving you guys the update. But he said they cut out the bit in the statement, and we noticed it straight off the bat, right? In the statement, they normally have that bit where it says ongoing rate hikes will still be required, right? But they took that bit out. And this is one of the biggest telegraphs that they could be coming to the last rate hike. That could have been it. Today's rate hike could have been the last bit. Now, Bitcoin is down 1.3% on the day. The NASDAQ is slightly sideways. Fine, some trading activity. That's absolutely normal. But now we need to look forward, right? Because the next meeting on June the 14th now could be the one where we pause. And over 80% of the market at this point, it will change and fluctuate over the next kind of 24 hours, are expecting to see that pause. And on Friday, we get our non-farm payrolls. Today, we got our ADP jobs figure, which showed that the labor market was still quite tight. More jobs were created than expected by quite a bit. But then we'll get our CPI reading next week on the 10th. We'll then get another CPI reading the day before the next FOMC meeting. So June the 13th, I believe, CPI. June the 14th, off the top of my head, is the next FOMC meeting, right? And if inflation can start to trend in the right direction, not only can we see that pause, but we can start seeing discussions of when is it going to be appropriate to cut. Right now, crypto is correlated to traditional markets, to risk on assets. And the reason for that is it's a function of liquidity. When the Fed are your friend, risk on assets and crypto do really, really well. But then the opposite is true. When the friend's not your friend, right? We had such good, easy time. We had boom cycle times. We had printing, and the money printer was off and running, and everybody was making money. In those periods, it was easy because the Fed was on your side. But now they're not on your side, right? And they haven't been for this whole period. But could this be that turning point where suddenly the Fed are going to start being our friends again? They're going to pause, and then they're going to start rate cutting, right? This could be that pivotal moment. And congratulations to you guys. Shout out to you guys who navigated this, right? Who managed to DCA, who are still building their portfolios. Because you went through one of the hardest periods. This is one of the hardest periods, and now we're in the final innings of it. Let's jump into some of the highlights, which I was tweeting from Jerome Powell, so you guys can see some of the things he was saying. So first and foremost, we'll kick off with Powell said we are prepared to do more if more is warranted. Okay, so he's basically saying, look, I'm not ruling out the fact that I could need to raise rate hikes. And the reason he has to do that is he needs to keep the markets in its box, right? He can't let the market get too excited and start getting loose again, because then inflation will come back. And he doesn't want inflation to rear its head again. That's the last thing he wants. He's seen it and he even mentioned it, that, inflation will come down and then boom, rears its head again. That's not what he wants, okay? He would not want that. So that's important. What else did he say? He also then said, so we covered that bit off. He also said, there we go. A decision on a pause was not made today. He said the absence of the ongoing rate hikes line in the FOMC statement, okay, he said it's a meaningful change. So we said it live on the thing because we opened up the statement. We saw straight away it didn't say ongoing rate hikes are required. He even said that himself to give us a clue that, guys, we took it out for a reason because we could be nearing the end. He also said many banks are now focusing on liquidity. I thought that was a bit of an odd statement because the reality is they should be focusing on liquidity the whole time. I think we are now moving into a new narrative, which is going to be this liquidity / credit crunch, right? Do not be surprised to see this being the big theme of topic. And I think that's the reason that's really made Jerome Powell have to cut his rate hikes, right? Not cut his rate hikes, but slow them down and really get to a lower level, which is 5% where we're at now. Because if this wasn't happening, if we didn't have this liquidity crunch going on in the banks, Jerome Powell could probably get to 5.5 and 5.75 and maybe even 6 on the Fed funds rate. But what he's saying is the liquidity issue from the banks is doing some of our work for us. So we won't have to rate hike to as high as we would have if the banks weren't struggling. Okay, so you've got this narrative going on. Now, loads of, popular figures such as Elon Musk are coming out, and they have been for the last few FOMC meetings saying, look, just cut. Stop now and start cutting. Cut by 50 basis points. But Jerome Powell is staying his path. You've got to give credit where it's due. I mean, I'm sat here in the UK where inflation is 10% and it's not in control, right? Germany is struggling. Japan is struggling. So for all the stick we give America and people give Jerome Powell, inflation is coming down, right? Yeah, the labor market is still strong. We saw that with ADP jobs figure. We get the non-farm on Friday, but wage increases are not increasing as fast. That's a good sign. We're not seeing signs of a wage price spiral, right? So these are positives we've got to take from it. And so if they're projecting that inflation will come to 3% by the end of the year and then work their way towards 2%, we could be nearing the end, right? And that's a really positive sign. Now, another interesting statement he said was, we believe we will need to stay on this for some time. So again, he's just saying, look, when we get to 5%, which is the current rate hike, we may pause, but we might have to stay here for longer. It may be that for a whole year, we still stay at this level. That's possible. So he's saying that. But the reality is, if the banks are still struggling, if we're still seeing issues, we can't risk driving the economy into a recession. But then something interesting is that he goes, it's possible we can avoid recession. Right? He said that. And then he even goes on to qualify that. He goes, I think it's more likely, he says it's more likely we will avoid a recession probabilistically than fall into one. Very interesting to see him saying that, right? Because it shows where his mindset's at. He feels like he's still got room to be aggressive, right? He doesn't think we're going to head into recession. If he came out saying, oh, we're really on a thin edge cliff here, I need to be careful, that could have been different, but that's not what he was saying. He was asked about the wage increases. He says, yep, the wage increases are moving down. That's a good sign. Of course it is, because it means less chance of a wage price spiral, which would be a big problem and cause kind of stagflationary issues. And then he said, if inflation remains high, we won't cut rates. And it's kind of an obvious statement, but again, he's just reiterating the point that, look, if inflation doesn't come down, I'm not done. Right? And somebody even asked him, what if, 3% is there for a while? He's saying, no, we need to get to 2%. He's sticking to that. He's been like that since the beginning, to be fair. He doesn't want to get caught up in the whole, Paul Volcker debate that he's going to leave 4% entrenched inflation. No, he wants to finish this off all the way down to 2% before letting his foot off the gas. He didn't give us any clues on, a conditional pause either. He could have said something like, oh, I'm going to pause, just make sure we do nothing, have a month off and then see if I need to bring it back again in June the 14th. He didn't say that either, which is very interesting. So yeah, really interesting FOMC meeting. And it could be one for the history books, because this could have been the end of this rate high cycle. And if you manage to invest throughout that, you invested during a very difficult time. And a lot of people entered crypto in 2021, 2022. And for you guys, you've only seen a period of the Fed not being our friend, which is not easy. Right? I mean, your dreams of coming into crypto, what you would have seen in 2019, 2020 was all green candles and positivity because the Fed was our friend and they were throwing liquidity in the market and there were stimulus checks and global central banks were printing money. And now we've just had a period of hoovering up money. And it's still not finished. I mean, the rate hikes are stopping, but he's going to keep it at this rate for a while. So it's still going to be at this 5% rate, which is still going to have a little bit of pain. But once inflation is broken, once the back of inflation is broken, we can then start plotting a path towards cutting rates. And that could tie itself perfectly with the Bitcoin halving, which we know is less than a year away. So where are you positioned on this, guys? How are you feeling about this? Are you seeing it as a positive? Are you seeing it as a negative? Are you fed up with the FOMC? Let me know in the comments. If you haven't watched the full live stream, then make sure you go check that out here so you can see exactly what Jerome Powell said and the questions he was asked. Thanks for watching. If you want to learn to trade, go watch this video here, and I'll see you in the next one.